Hello traders, and welcome back to my YouTube channel, IPDATrader. Now in today's video, what you will see is a live execution in front of my students of this particular trade that you see developing. We do these Zoom sessions during New York hours every week. We happen to do this Zoom session in particular today. You will see me outlining the different scenarios that we were preparing for, not only on gold, but on Euro USD. We had multiple scenarios as well that we were waiting for, such as the liquidity run on this high, and you can see how that has played out so far. We grabbed the liquidity high, we dropped back down aggressively into the clearing of the opposite liquidity pool. But once again, the focus of this is going to be the gold execution that I did live today in front of my students. You're going to see the entry, you're going to see the profit, you're going to see the idea behind the trade, because this is all about having an idea behind your trade. And yeah, hopefully you guys enjoy that. Hopefully that's going to be educational for you. It should be pretty educational, because this particular setup is something that I trade very often. And once again, I'm going to give you a quick rundown of it over here, but you're going to see this live in a second. I just want to give you a quick rundown of this. So we have a major swing high over here, right? We have news releasing as price is trading over here, challenging the high to the left, and we're anticipating multiple scenarios. The first one we anticipated is the clearing of the swing high into the POI, which is this red box that you see on the left, for a short opportunity, right? Scenario number two that we anticipated was the clearing of this swing high and this swing high into this unmitigated and naked level that you will see on the left hand side over here, based on the 1 hour time frame, if I'm not mistaken. So if I go to the 1 hour, you can see the unmitigated low of the bullish candle wick right over there. That was the second idea. Now the third idea, which is the one that actually played out, was simply to look for the clearing of the swing, which is this red line. If I drag this across, we have a major swing high here, the clearing of the swing, and price trading back down the level, back down the swing. That would have been a confirmation to go short, which is exactly what happened and exactly what we executed. Now, I was targeting here initially, and you will see that in a second, which we got that quite easily, but I still have a runner running that is sitting, that is aiming for this particular Asia low liquidity pool, and we're getting close to that. Now I've traded my stop loss. I just don't really move it here because it's not really relevant, but that's what you're gonna see today. You're gonna see this live execution. I will warn you that the audio in the video is unfortunately not the best. For some reason, the audio is not clear. It has some cuts, but I did try my best to make sure that it is still audible and that you're able to hear it appropriately. And once again, I hope that this is going to be very, very useful for you. I have big plans for this upcoming year, probably going to be opening new services. I'm going to be partnering with multiple companies at the same time. So I do have a lot in stock for you guys. Hopefully you enjoyed the video, and now what you will see is the Zoom session that I hosted with my students live. So up into the Zoom session, enjoy the video. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, AAAFX. AAAFX is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN Plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good, and not many other brokers will do. So once again, massive thank you to AAFX for sponsoring this video. And now into today's lesson. Enjoy the video. Onto gold, which is the main thing that we should be focusing on. When we look at the market mapping, guys, this breaker block high was given this Sunday, and you can see the sweep into it, the tap, and the move away. Very, very simple concept. You can see the imbalance to the right of the breaker, which makes the level even better. We can see a prior swing low just ahead of the level, which makes it even better. We clear buy side liquidity above this high, drop back down, engineer relative equal lows prior to the level. We move up, very perfect setup. We move down, we tap the level right over here. We actually tap deeper into this wick high here, untested level, and we bounce away from it as expected. Now, after that, I said yesterday that I was looking for a short here. Price turned ahead of it just by a few pips, provided a new leg lower, pullback, mitigated. Once again, very same story, mitigate this wick high here. Sorry, wick low, moves away on the short term, moves up, and now it's challenging this high over here. Whoops, wrong tool. Get rid of that. Now it's challenging this high over here. Right, so what I'm going to be looking for today is, let's see how far this is. This is 40 pips away. I'm open to two options, basically. The clearing of this high into the POI for short, the clearing of the major swing high into this POI for a short, right over there. This is the level 1772. And basically looking for shorts if we initially move up with the news. If we start moving down with the news, you can see that this unmitigated wick level has already been tested, which is a shame because it would have been very, very good. But we do have all the levels, right? We have this one that has been tested, as we said, but we have this wick high over here that has not been tested yet. So this could be a potential entry point if the Asian high, if the Asian low is going to remain untaken. At the same time, if we clear below the swing low, we have an FU candle beautifully waiting here where I'm going to be looking for a long. So it's very simple. Buy side liquidity here, buy side liquidity here, potential shorts here. If it invalidates that, potential shorts here. If it moves down, potential buys from 1742 below this pool of sell side liquidity, and potential buys below this pool of sell side liquidity 1740 daily ATR low into the FU candle. So that's what we're going to see. That's what I'm going to focus on. Obviously, I'm open to adapting depending on what the news actually do. But at this point, we have about 15 minutes for the news, and we're going to be waiting for it. Let's see if it does something interesting and we can take a trade. So that's the planning for gold. And I'm going to be observing Euro USD as well, which has a very, very clean ideas that I'm waiting for. So one a short here, potentially, one a long here, potentially, and that's about it, pretty much. And one a short here, potentially. So yeah, let's focus on gold. I know what I'm waiting for now. Now it's just waiting to see if it's going to happen and if we can get there. If we start trading lower, we would have grabbed this major swing. So I'm still going to be looking for a short. But ideally, I want to see us tap into 1767. So it looks like we're not going to get there. This was a 30 pip spike, which is a little bit more respectable. But ideally, we want to see us trade into 1766. This is what Euro USD did. You can see Euro USD is approaching the liquidity pool here. So also paying close attention to that. Just turned ahead of it, which is strange. And we're still waiting for gold as well. Okay, it looks like gold has swept the high and is back in below the swing on the left. So let's wait a little bit more. USD has turned ahead, turned around just ahead of the level. Gold is also starting a descent. Let's see if this can push a little bit higher. Once again, there's no rush. The NY just opened. NYSE is gonna open in about 1 hour and 15 minutes, so it's no rush. We could still get a new push higher. If this is gonna be the high now, then that could potentially be the case. So what I'm doing now is I'm looking for an entry over here at this level because my conditions are fulfilled. Once again, I'm not the best trader in the world if this works. I'm not the worst trader in the world if this fails. This is another trade. My stop loss is, let me see over here. My stop loss is 1765 to 50. 1765, 50, 75, 50. Just giving it a couple of pips to breathe above the high in case it's just gonna gently sweep it, and then drop down. So that's sort of the current trade that I'm in. And if that fails, we're gonna be looking for a very similar opportunity right at this swing high on the left hand side that we see. So yeah, that's sort of the idea. The news was good. I think, sorry, very bad. So that's why we saw that initial push up. That I think should be respected, drive lower. However, if that fails, then we'll have to wait for the next opportunity, and not going to be jumping emotionally right back in. Right, you have to keep your emotions in check. This is just another trade of many trades that are going to happen. So it's absolutely fine. Based on my statistics, I have a 59 to 60% win rate with a 1.75 profit factor. So, there's a chance I may lose it. However, it should be a higher chance I win it. So I'm completely fine just doing what I do every time I want to execute. Not nervous, not concerned, just letting price do what it needs to do at this point. You have to remain cautious. Very, very important. Da-da-da-da-dum. And yeah, your USD looks like it's gonna eventually go for the buy side liquidity, which is fine because at that point I will be waiting for this wick low to take a trade. So yeah, that's sort of the idea with this particular trade. So we're still in it. The wick high is still being respected. Once it trades above that, then the probability of this working becomes rather slim. And based on the price action, we may get that stopped out happen. So yeah, but until that happens, I still believe in the trade, and I still believe it can play out. So not too concerned. Da-da-da-da-dum. Just another trade. Your USD, GU didn't do much as expected. GJ, on the other hand, still not doing anything really. So yeah, That's sort of the trade idea that I'm currently in. And my target is based on this 15-minute wick high over here. We do have another one here, so that's why I'm going to be mitigating positions below this low if we do end up reaching there. And yeah, we're going to see what happens. As HT appropriately mentioned, we have GDP happening in about 4 minutes. So I have my finger on the close button in the case that I'm gonna get slipped with the news if news happen to push price and rocket it. Okay, so that I don't suffer any slippage if that's gonna happen. Still about 2 minutes for the news. As I said, I'm going to be paying close attention to close my position manually, even though I have the stop loss in place as it shows here. But I don't want to be getting any slippage. GDP is going to do anything significant, which usually in my experience, it does not. So yeah, just to give you guys a heads up, if any of you is taking this trade as well, you can get slipped with GDP. So keep that in mind. Okay, so looks like I'm gonna get taken out shortly, not yet. Okay, we have a nice rejection here. That's why we said we want to give it a little bit of breathing room, right? Okay, so now we're moving in profit, which is great. Whoops, straight back up, straight back down. Still in it. Um, didn't get taken out. As I said, you want to give it a little bit of breathing room above the high. So yeah, we're gonna see if this is gonna do anything really. I have my mouse on the close of the position in the case of slippage, as I mentioned, because GDP can move price around. So you don't want to mess with that. You want to be ready to close if you see that um that what is it? Uh, that GDP pushes price up and your stop loss doesn't get triggered. So yeah, we're moving now nicely in profit. Um, Still not doing anything in terms of trade management. Me personally, GDP just dropped, but you're free to do whatever you think it's best for you. For me, there's still no management. We were up about 1 hour, and I'm looking to mitigate positions below the swing low here. Well, not swing, but on this time frame, it's kind of a swing low, targeting this level over there. 1 pip above this level is my target. I noticed that some of the POIs you indicated earlier were formed during the Asian session. In your experience, do these low volume areas sometimes work? Absolutely. It has nothing to do. In my experience, I've not noticed anything regarding low volume areas being less effective. For me, it's more about the market structure and the overall story, and not so much about the timing of the POIs. Um, for me, timing is important when we're talking about taking trades. I want to execute trades when there's volume. So that's why I'm trading right now. Right. So we're moving very closely to allowing ourselves to mitigate positions, which is going to be great. So we're dropping quite aggressively into target, which is great. And target achieved. I'm going to leave a runner over here, but I'm going to be securing majority of my positions at this point. So I'm gonna close a few lots here. Gonna close 11 lots, and I'm gonna leave one lot to run pretty much. Beautiful trade. One lot is running, and that's gonna run pretty much to a better target, which is gonna be the Asian low. That's where my runner is gonna go for about lots of pips. So here you go. That is the live execution. Hopefully this was educational. Now I have no risk, and I banked about a 2.5 R, a little bit more actually, because it got slipped, it smashed through the TP, and now we have a runner that can potentially give us a lot more, right? Still a 5 lot running, which is about 54 pips in profit now. Great trade. Are there any questions with the trade and why it is important to give breathing room above your highs and lows that you use are stop losses? Because I've said this for months now. If this was me a few years back, my stop loss would have been taken out. Okay? But you have to give it a couple of pips, 5 to 7, depending on the asset class, and allowing it to breathe. Because if it's gonna sweep the high, it can still work. Right? You want to see some acceptance above your stop loss. You don't want to get taken out with a wick like this. How do you calculate the pips on the asset? Well, it's pretty straightforward. The more volatile the asset is, the more pips you want to give it as breathing room. Okay? It's very, very simple. Gold is very volatile. You want to give it more than Euro USD. Euro USD usually with 3 pips is more than enough as breathing room because it's less volatile. But it obviously depends on the time frame that you execute on. If it's a 5 minute swing high that you're using as a stop loss, it requires less pips than a what's that? Than a 4 hour swing high. That's gonna require more pips as breathing room. So yeah, beautiful trade, simple trade. We were fortunate, well, I was fortunate that I got slipped because I was initially looking to enter here. Let me show you here. I was looking to enter here at this wick low, but sorry, this wick low here, but price pushed through it aggressively, order got slipped, and I entered at 170, 1762, 700 pretty much. And the target was this level on the left, which was high probability below a sell side liquidity. Very, very simple. And we can see we're now playing around here. Are there any other questions regarding the trade that was executed today? Because I think it's very, very simple. The key, guys, the key to this trade is the clearing of this swing high. Okay? If this would have not happened, there is no trade. It's simple. If this buy side liquidity is not captured, there is no reason for price to move lower. Okay, now after you understand that, the next thing that you need to understand is this now going to be the high of the sweep, or are we going to push a little bit higher than that, right? Maybe into this level. And for that, you have to see the candles that form after we clear the swing high. Very, very straightforward. And in this case, we had a rejection candle with a massive wick and a big bearish candle. So I was sure that this is probably going to be the high of the sweep. Okay. Price pushed up, order got slipped, stop loss a few pips above the swing high that swept the liquidity, because this can happen again, right? That you get a minor sweep as well. So that's why my stop loss was at 250, as I mentioned, as price was over here. And very simply, price then drops. The news accelerated the move. Usually would have taken a lot longer, but this time um, it was quick because we had news happening that pushed price as expected, right? And that's why I don't trade news, because, well, trade based on the news outcome, because if I would have done that, then this would have meant that ADP was bad, so gold should go up, right? But it went down. So, yeah. So guys, now you've done watching the Zoom session. As I said in the beginning of the video, I hope it was educational. The setup here is very, very simple. It's something that I've been trading for years, and it happens everywhere on multiple time frames, on multiple pairs, right? You're just looking for a major swing and just looking for the clearing of it and the return back down, because you're looking at market participant psychology when we know that retail logic dictates that people are going to go long above this high, because a market that is trading above highs is seen as a strong market and should be bought, and a market that's trading below lows is seen as a weak market and should be shorted, right? And you can see in both scenarios, the moment we trade below the significant swing high or swing low, we start squeezing in the opposite direction, because we're getting that transaction happening. We're getting buyers being initiated above the high. People that were short anywhere from this high to this low have now been stopped, because we know that stop losses always rest above and below swings. So this is the area to be doing business at, because the ladder has now been cleared, and now you can look to take a reversal. Okay, always remember that a reversal will always occur only if we've cleared any major swing first. Okay, look at this example over here. We have a major wick high. The moment we trade above it, we reverse. We don't do it before that, because it wouldn't make no sense. We need to grab liquidity in order to make moves happen. It's very simple. Look at this example over here. Another swing high. When did we started this major retracement? Above the swing high. Once we clear that, it's not going to happen before that. And once again, another one over here. Minor swing low. You see we create relative equal lows. We clear that, and then we start the move up, right? You have to be looking for these things, because that's how the markets really book. They're not going to turn around unless you have a liquidity pool captured. It's the way it works. And I know that many traders must have been looking at this particular POI today to go short, right? They would have said, hey, POI here, and you get a reaction, right? Let's take a short. But no, why would that happen? The liquidity pool is resting here, right? It makes no sense. So keep those ideas in mind. You have to be looking for those things to make sense. And look, I'm not making this up. Same thing here. Previous low creates relative equal lows, places a minor swing low, and starts initiating higher, and we don't turn around until we trade below the swing low and the liquidity has been captured and shorts have been initiated. That's how the markets book. Remember, guys. So once again, I don't want to make this too long. Hopefully you enjoyed the video. I did try my best with it. Hopefully it was educational. Remember that I'm not accepting any students in my mentorship as of now, and that new content is gonna come in this upcoming year with a lot of strength. I have a lot of things prepared, new services, new partnerships, everything there for you to help you become a better trader. So thank you very much for listening, and if you enjoyed the video, feel free to drop a like, feel free to drop a comment, and give me video suggestions. I always read through them, even though I don't have a lot of time to do that, but I try my best to keep up with that as well. So thank you very much for being there, guys, and I'll talk to you guys very soon. Take care, everybody.